Good morning, everyone. This is Przemysław Radomski, CFA. In today's video, I'm going to talk about what happened yesterday, what's happening today on the precious metals market, and what the implications are going forward. As you may have seen, gold rallied quite visibly yesterday. However, it declined in today's pre-market trading. The movement has been notable also in silver, and actually in silver's case, the decline has been even more notable. So gold was practically the only one that was doing the rallying yesterday. Well, mining stocks moved higher too, but we'll move that in just a second. First of all, I would like to recall the analogy that I described in the previous days, if you've been following my analyses. And that is the first two trading sessions of the year might not be the most reliable sessions out there. If you recall what happened in early 2022, a year ago, on the stock market, on the first day stocks rallied. On the second day they rallied, but they reversed on an intraday basis, and then they continued to decline. Well, gold rallied on the first day of the session, first day of the year. It declined on the second, it rallied too, but declined on an intraday basis during the second session of the year, and today it's already declining in the pre-market trading. So, is the history rhyming? It could be the case. I'm not saying that this is the only reason for which the precious metals sector is likely to decline in the following weeks, which is the case, by the way. What I want to emphasize here is that the first few sessions of the year might not be the most reliable indication of what's likely to happen next. There is so-called tax loss harvesting at the end of the year, where people closed their positions which were in the red, and they buy back early in the year if they want to maintain the continuity of their position. So the recent strength in the precious metals sector, very recent strength, might have been greatly affected by this phenomenon. So I wouldn't make that much of it. While we're here on the stock market chart, please note that it declined substantially in December, and now it's been moving sideways in a flag pattern. The flag patterns are continuation patterns, which means that this pattern is likely to be followed by another decline. And the moves that tend to follow flags tend to be relatively similar to moves that preceded it. In this case, stocks will be likely to decline significantly once again, probably to its 2022 lows or so, before pausing and then declining once again. That's the most likely outcome, in my opinion. And while we're here, speaking about drivers behind precious metals sector's movement, let's take a look at what's happening in the US dollar index. From the short-term point of view, we see that the USD index moved higher at the beginning of the year, which is very much in tune with its monthly cyclical tendencies. It tends to reverse close to the turn of the month, and it seems that it happened once again. This time the implications are very bullish, because it's obvious that the most recent move was to the downside. So the turning point has bullish implications. And also please note that RSI and what's happening in it is just like what we saw in mid-2021. Not only did the USD index rally back then after a broad bottom, but also it triggered a sell-off in gold. Is the history likely to repeat itself? I don't want to say repeat itself to the letter, but it's likely to rhyme, and the implications are definitely bearish, especially given the very negative correlation between gold and the US dollar index. Now, looking at gold itself, it moved above its 50% Fibonacci retracement level. However, it already moved back below this line in today's pre-market trading, so it already invalidated the breakout. consequently, the bullish implications are not present, even though gold did move above its intraday highs. The 50% retracement is something very important from a technical point of view, so the fact that gold was unable to hold those gains is meaningful. Again, the rally itself might have been just this technical phenomenon due to previous tax loss harvesting. So also RSI is very close to 70, which does not bode well for the precious metals sector. As you may recall, I just talked about the US dollar index and its analogy to mid 2021. That was the top in gold that I mentioned, and please note the RSI action. First, it was above 70 for some time, trading more or less sideways. It's been the case also recently, and then it moved one final comeback. It was relatively small back then, it's bigger now, but it wasn't the turn of the year after all, and now it is. So these situations are also analogous over here. Either way, what happened then was a slide, and what's likely to happen now is a slide. Not necessarily today or tomorrow, though. And what about silver? Well, silver invalidated its breakout above the previous highs, and basically is down also in today's pre-market trading. So it seems that the silver rally has burned itself out, and so we saw the indication that silver is rallying at the end of the rally first. I mean, it outperforms gold. That's what it tends to do in the final moments of a given rally. However, right now the rally is likely right now this year so far was likely led by those technical tax loss harvesting based purchases. So it might not be present. Silver's outperformance might not be present, and it's not an invalidation of the bearish case. Mining stocks moved to their 50% Fibonacci retracement level, junior miners in this case, just like gold did, and then they moved a bit lower. Since gold is down in today's pre-market trading, it's likely that miners will be down in today's session as well, thus making it obvious that they just topped. Please note that the intraday reversal happened also at the upper border of the blue rising trend channel, so the resistance was strengthened by it. And we also have an analogy to the mid-2022 performance, and to a smaller extent to the mid-2021 performance. But over here, we see that the rally ended initially, then we saw some sideways trading. So again, the rally pretty much ended at the beginning of the December, then we saw some sideways trading, and now we see this fake move up, supposedly a major breakout above the previous highs, but just as the breakout turned out to be a fake out in April 2022, I think this is going to be repeated based on the resistance levels being reached, based on the previous performance of mining stocks of silver relative to gold, on the situation in the stock market, again the flag pattern and slide that's likely to follow, and perhaps most importantly the situation in the US dollar index. So while it might not be obvious based on day-to-day movement in gold, silver, and mining stocks, it is very likely that we'll see a decline, probably a big decline in the following weeks and months in the precious metals sector. Of course, this is up to date at the moment of the recording, and if anything changes, I will get back to you accordingly. I will definitely to my subscribers. If you'd like to subscribe to my premium service, please visit sunshineprofits.com. There's a services and products menu, pricing, and then you can subscribe. You can visit goldenmeadow.eu to join our community and interact with other investors. And definitely I encourage you to visit goldpriceforecast.com, which you've seen many times in this video, and sign up for our free newsletter. And you can also interact with other investors and authors, myself included, in the comment box below articles. Thank you for watching. Don't forget to subscribe. And again, this has been just my opinion only, not investment advice. Thank you. Bye-bye.